I wanted to get back to the basics with today's video. So what are we doing when we're buying an insurance policy? It's a simple transfer of risk. So we're just taking a risk that we have and we're contracting with the insurance company to assume that risk for us. Now there's three things that we can do when we have a risk. We can transfer all of the risk, which is pretty rare to see an insurance company pick up all the risk. They usually want you to have some skin in the game for it. The one case where I've transferred all the risk for something is for my wife's engagement ring. So we had, I bought a comprehensive policy for it, and so it covers, pretty much everything that could happen to it. And then it also has a zero deductible. So that's a case where I really transferred all the risk, and that was my goal with that policy, to do that. The next thing you can do is you can just transfer some of the risk to the insurance company. This is the most common that you see. Pretty much every insurance policy that you have is going to have some sort of deductible on it, whether they call it a deductible or not. It could be different for each policy, but even for like your auto insurance, your typical auto policy, you have a $500 deductible. So if you're in an accident and the damage is $1,000 or $1,500, you're basically sharing that expense with the insurance company. So you're going to pay $500, and then they're going to pay $500 or $1,000 to get your car repaired. Now, the other thing you do is not transfer any of the risk to the insurance company. So you can transfer none of it. And you might be surprised that me being an insurance agent is a big fan of not transferring the risk. So I am willing to take on risk for a lot of things because I'm frugal. You save money that way. And so for example, one of the things that I don't transfer the risk for is my cell phone. I've never bought insurance on my cell phone. Luckily, I've never needed it. I try to be pretty careful with it. So that's in the win column for me on that. Same thing, if I buy a piece of equipment or something, I typically don't buy the extended warranties on it. So that's a risk that I'm willing to take to save that money. So now the problem with insurance comes in is when you think you're transferring the risk to the insurance company, but you're not. So I find this happens most with homeowners insurance policies. You can get a basic homeowners policy that covers a lot of the big things that you need, but there are some a la carte coverages that are available for homeowners insurance policies that really make it a more comprehensive policy that's going to probably transfer more of the risk that you're actually expecting. So the biggest issue I find is that the insurance policy hasn't been explained to the client. Someone hasn't taken the time to ask them the questions to find out what's important to them, or the insured or client just never volunteered that information. They didn't let the insurance company or agent know what was important to them when they were trying to transfer risk. So make sure if you're buying an insurance policy and your goal is to transfer the risk to the insurance company, understand what is covered and what's not covered, so you know truly what you're transferring and what you're willing to self-insure. And like I said, I'm a big fan of self-insuring. I'm also a big fan of insuring most of my risk, but really just taking a higher deductible to save money on that insurance premium. So I hope you found this tip helpful. If you have any questions, feel free to reach out to our agency.